Welcome back to AlgoBot, where we break down automated trading strategies for MetaTrader 5 in plain, practical language. I'm your host at AlgoBot, and today we're exploring an expert advisor called Higuchi Dimension Regime Trend. This one is built around a fascinating idea borrowed from fractal geometry, measuring how rough or how smooth the recent price path actually is, and only trading when the market looks orderly enough to trend. By the end of this video, you'll understand the Higuchi fractal dimension, how it acts as a regime filter, and how a simple moving average cross turns that reading into long and short entries. Let's get started. So what exactly does this expert advisor do? At its core, Higuchi Dimension Regime Trend is a trend-following strategy with a built-in market filter. It can be applied to any symbol and any time frame you choose in the MetaTrader 5 strategy tester or on a chart, because every calculation is read from that single chart's own time frame. Forex pairs, indices, metals, the logic is the same wherever you attach it. The distinctive ingredient is the Higuchi fractal dimension. This is a measurement that comes from fractal geometry, and it answers one specific question: how rough is the recent price path? A perfectly smooth, near straight line has a fractal dimension close to 1. A wildly jagged, space-filling scribble has a dimension close to 2. The strategy computes this number over a window of recent closing prices and uses it to classify the market into two regimes, smooth and trending, or rough and choppy. Why does that matter? Because momentum and moving average signals tend to behave very differently in those two environments. In a smooth, directional market, a moving average cross can align you with a real move. In choppy, noisy conditions, that same cross tends to whipsaw back and forth. So this EA only allows trades when the fractal dimension says the market is smooth enough to trend, and it steps aside otherwise. Who is this style suited for in an educational sense? It's aimed at traders who are curious about regime filtering, the idea of measuring market conditions before applying a directional signal rather than acting on every cross blindly. It's really a study in patience and selectivity. As always, this is educational information only, not financial advice, and every strategy carries risk, including the risk of loss. Let's walk through the mechanics step by step. The strategy runs on a single time frame and acts once per bar, on the close of the just completed bar, so its decisions don't repaint. Before it does anything, it waits for enough history to warm up its calculations. Then, on each new bar, it evaluates two separate things. The first is direction, and it comes from a baseline exponential moving average with a default period of 21. The EA looks at whether the price that just closed crossed the moving average, and whether the average itself is sloping in the same direction. For a potential long, the previous close was at or below the moving average, the current close is above it, and the average is rising. For a potential short, it's the exact mirror. The previous close was at or above the average, the current close is below it, and the average is falling. This close cross of a same sloping average is the directional signal. The second thing is the regime gate, and this is where the Higuchi fractal dimension comes in. Over the last 40 closes, set by the f de loopback parameter, the algorithm resamples the close curve at coarser and coarser strides, measures how the total curve length grows, and fits a straight line to that relationship. The slope of that line is the fractal dimension, bounded between 1 and 2. A value near 1 means the path is smooth and trending. A value near 2 means it's jagged and choppy. The strategy only treats a signal as valid when the dimension is at or below the trend threshold, which defaults to 1.45. If the dimension is higher than that, the market is judged too rough, and the EA stands aside no matter what the moving average is doing. Only when both align, a trending regime and a fresh, same-sloping cross, does the strategy signal an entry. At that point, it measures volatility with a 14-period average true range and builds a symmetric risk bracket. The stop loss is placed 2 ATRs from entry, and the take profit 3 ATRs away, for a reward to risk of 1.5 to 1. Finally, this is a stop and reverse system. If a qualified opposite signal appears while a trade is open, the EA closes the current position and immediately opens the new one in the other direction, so the book always stays aligned with the freshly measured smooth trend. Let's look at the actual MetaQuotes language 5 code that runs inside the expert advisor. At the top are the input parameters you can adjust in the settings. FD loopback, defaulting to 40, is the number of closing prices fed into the Higuchi estimator. CMAX, at 6, controls the coarsest resampling stride. TrendThreshold, at 1.45, is the gate. The strategy only acts when the measured dimension is at or below it. EMA-period is the 21-period baseline moving average. ATR-period is 14, and StopAtrMult and TargetAtrMult at 2 and 3 size the stop and target in ATR units. Below that is the decision logic. The strategy builds two Boolean flags. Cross-up is true when the previous close was at or below the moving average. The current close is above it, and the average is rising. Cross-down is the mirror for the downside. Then it computes the fractal dimension and sets trending to true only when that value is at or below the threshold. The signal becomes a buy when trending and cross-up both hold, and a sell when trending and cross-down both hold. Now the two order blocks. Let's bring the whole strategy to life on a chart. Up top you can see the price candles with the baseline exponential moving average drawn through them. And in the panel below sits the Higuchi fractal dimension, our regime gauge, with a dashed line marking the trending threshold at 1.45. Remember the rule. The dimension reads low, toward the bottom of that panel, when the price path is smooth and orderly, and it climbs higher when price turns choppy and jagged. Look at the opening candles on the left. Price is drifting sideways and slightly lower, weaving around the moving average without conviction. Notice where the fractal dimension sits during this stretch, up above the threshold line in the red chop region. Even though price is brushing the average here, the regime gate is shut. The strategy reads this as noise, not trend, and it deliberately stands aside. This is the whole point of the filter, to keep the EA patient while the market is undecided. Now watch the fourth candle. Price pushes up and closes firmly above the moving average, and crucially the average itself has just begun to tilt upward. At that same moment, the fractal dimension in the lower panel drops below the trending threshold into the green smooth region. Both conditions now agree, a trending regime and a fresh close cross above a rising average, so the strategy signals along. That's our buy entry marker. The stop loss is placed a set distance below, at 2 times the current ATR, while the take profit sits further away at 3 times ATR, giving a reward to risk of 1.5 to 1. From there, the move validates the reading. The next candles step higher one after another, each closing above the last, and the fractal dimension stays pressed down in the smooth zone, confirming the path is genuinely orderly. Price climbs steadily until it reaches the take profit target above, and the long trade is booked as a winner in this illustration. Notice how the low dimension throughout the run matched a clean, persistent advance. Exactly the environment this filter is designed to catch. Then the character of the market changes. Near the highs, price stalls, prints a couple of hesitant candles, and the fractal dimension ticks back up toward the threshold as the smoothness fades. The EA doesn't chase. It simply waits for the next qualified setup. Now follow the right-hand side for the short. Price rolls over from the top, and on the candle marked as the sell entry, the close drops below the moving average while that average has turned downward. In the panel below, the fractal dimension slides back under the trending threshold, signaling a smooth, orderly move, this time to the downside. Both conditions line up again, so the strategy signals a short. And because this is a stop and reverse system, if a long had still been open, that opposite signal would have closed it first and then flipped the position. For this short, the risk bracket mirrors the long. The stop sits above the entry at 2 ATR, and the take profit sits below at 3 ATR. Watch the following candles fall in an orderly step down, the fractal dimension holding low to confirm the trend, until price reaches the downside take profit target and the short trade is booked. 2 trades, 1 long and 1 short, each taken only when the roughness of the price path said the market was smooth enough to trend, and each avoided when the dimension warned of chop. That patient, regime-first discipline is the heart of Higuchi dimension regime trend. Let's wrap up. Today we explored Higuchi dimension regime trend, an expert advisor that measures the fractal dimension of the recent price path to decide when the market is smooth enough to trend, and then uses a baseline moving average cross to define long and short entries, with ATR-based stops and targets and a stop and reverse design. We walked through the logic, read the code, and followed both a long and a short example on the chart. Remember, everything in this video is educational information only and not financial advice. No strategy removes risk, and losses are part of trading. If you found this breakdown helpful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and leave a comment telling us which strategy to cover next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.